Appreciate you joining us. Big news in the world of impact investing. Japan International Cooperation Agency, or JICA, has announced a $40 million investment into Avishkar Capital's Global Supply Chain Support Fund. The fund is designed to back small and medium enterprises across Asia and Africa with a focus on agriculture, food processing and manufacturing. To discuss what this investment means for Avishkar's strategy and for impact entrepreneurship in emerging markets, I'm joined by Vineet Rai, the founder of Avishkar Group and managing partner at Avishkar Capital. Vineet, welcome back to Startup Street. First, tell us, what does JICA's $40 million investment mean for Avishkar Capital and the Global Supply Chain Support Fund? You call this a new chapter in the India-Japan partnership. How do you see this collaboration strengthening economic and impact ties across Asia and Africa? And with JICA now on board, does this change the scale or scope of your fund's ambitions across emerging markets?
Having me here on the show. Well, this is a good news for us, but the bigger context, and which it is in the context which I spoke about, why we think it's a new chapter, because this investment is part of Indo-Japan partnership for economic growth in Africa, and so this is actually a completely new thought process where Japan is co-partnering with Indian Ocean countries to make a significant difference in the economic growth of Africa. And this also is a first time where Japan is investing in an Indian fund, which will then be investing in Africa to support economic growth as well as bring about significant change. So in that context, I said it's actually a new chapter where two countries are coming together to support a strong continent. For the fund, it is good news. We want this fund to reach $220 million, and this $40 million infusion actually helps us cross the $100 million mark. So hopefully, we are looking to actually scale this up to $220 million soon. And
all right. Sure, Vineet. At the heart of your work is the idea of bridging the opportunity gap for the emerging $3 billion. How will this particular fund translate into livelihoods, climate action, and social impact in underserved geographies that we're talking about? And what is the ticket size of the investments going to be?
So small and medium enterprises actually are the largest engine of growth, both for job creation, for women empowerment, for women job creation, for actually trying to solve for climate impact as well. And therefore, whatever we are trying to do through this fund is going to make a significant difference on all the critical areas of impact that we look at, whether it is finance, whether it is actually empowerment, whether it is job creation, whether it is gender empowerment. And it is in this context that we believe this fund is going to play a very important role. I think the important part of small and medium enterprises is they are not really venture worthy. That means you can't actually put equity investments in them. And therefore, we structured this fund so that we can provide capital in a form that is designed for the cash flows, using the cash flows of the companies. And we can actually allow the companies to scale themselves up to meet the global demand that they are facing. And given the current scenarios of significant geopolitical uncertainty, these kinds of partnership will make a big difference, not only just to places like Avishkar, but to SMEs that are operating in Southeast Asia, India, and Africa.
Okay. Vineet, the Global Supply Chain Support Fund has already made 8 investments. Walk us through the sectors or the kinds of businesses you're backing and what makes them stand out. Also, how many more investments do you plan to make by the end of this year?
So if you actually look at the kind of investments we have made, we have looked at agriculture, and we are generally focusing on export-oriented companies. So giving you some examples of companies that we have supported in India, INI Farms exports, Agrostar and INI Farm exports fresh fruit and vegetable to various parts of the world. Avishkar has supported that. We have actually supported companies like Posh and Jumps, which are essentially auto ancillary products for electric EV vehicles to continents like Europe and Japan, and high quality steel, auto grade steel, to again exports that are taking place. So this is actually supporting manufacturing on the ground. If you go to Kenya and you look at Kenya is the world's third largest producer of macadamia nuts. We are actually supporting the exports of companies that are exporting those nuts to Europe. So the design of the product that we have is to allow export-oriented companies, and therefore we can actually capture a dollar-based return. This is a dollar-denominated fund.
Okay.
We wanted to actually remove the risk.
All right. One final question, Vineet, if you could quickly answer that. With $550 million assets under management at Avishkar Capital and $1.3 billion across the group, what's your vision for Avishkar Capital 5 years from now, and how central is this fund to that journey?
So I think this fund is important because Avishkar Capital is largely known for its equity investments at early stage in the impact space. This fund is our first credit fund, and our ability to scale this fund would make a significant difference to the desire of the group, which essentially is eyeing towards a $3.5 to $4 billion of assets by 2030 and roughly around $7 to $8 billion by 2035. So building the credit side of the business is actually a critical component to the scale that we are envisioning for the group.
All right.
And some of it will be seen by 2030 and the rest by 2035.
All right. On those milestones, let me quickly wrap up this conversation. Many thanks, Vineet, for joining us on Startup Street today, and wish you the very best for all your growth plans.
Thank you so much.